Level 1, the threshold, 847. That's your checking account balance on a Tuesday in March, not your savings, your balance. The number you see when you're standing in line at a grocery store doing the math before you reach the register. You are 24 years old. You have a degree that cost $47,000 and a job that pays $41,000 before taxes. After taxes, $2,890 a month. Your rent is $1,350. Student loan minimum, $340. The car you bought because you needed it and couldn't afford it, $287 a month. Insurance, $174. You are not behind. You tell yourself you are not behind. But every financial decision is a calculation that happens in real time with no margin for error. You put the organic eggs back. You get the regular ones. You split a streaming password with someone you haven't spoken to in 4 months because canceling it feels like admitting something you're not ready to admit. This is what zero feels like. Not cinematic, not a crisis, just a low hum of arithmetic running underneath every single thing you do. You don't talk about money. Nobody does at this level. But everybody's doing the same math. You check your account at 11:43 p.m. lying in bed. The number hasn't changed. You close the app. You open it again. $847. You move $200 to savings. 3 days later, you move it back. This is the level where money is not a tool. Money is the oxygen. Either there's enough or you're suffocating and you can't always tell which one it is until it's too late. Level 2, the break. You get a raise. Not a big one. $6,400 a year. It lands as $410 extra per month after taxes. You feel rich for exactly one afternoon. Then the car needs $780 in work. You learn that expenses expand to meet income. Always. But something else happens. You pay off the smallest credit card. $970. You screenshot the zero balance. You send it to no one because who would understand what this means? But it means everything. Because for the first time, a number moved in the right direction because of a decision you made. Not luck, not a windfall, a decision. You start thinking differently. Not about making more money, about what money is supposed to do. You open a Roth IRA on a Sunday night. You fund it with $150. The balance looks like a joke. You contribute anyway. $150 a month. Automated. You never see it leave. By the end of year 1, you have $1,800 in the Roth. You also have $3,400 in a savings account earning 4.8%. You are not wealthy, but you have stopped drowning. And the difference between those two states is larger than the difference between wealthy and rich will ever be. Level 3, the shift. Your net worth crosses $1,000 for the first time. You're 26. You check the number twice. Not from anxiety, from disbelief. You've never had 5 figures that weren't debt. The feeling is strange. It doesn't feel like arrival. It feels like proof of concept. You start reading, not self-help, actual books about how capital moves. You learn what an index fund is. You learn why a 0.03% expense ratio matters and a 1.2% expense ratio is theft in slow motion. You open a taxable brokerage account and stare at it for 2 weeks before putting anything in. You invest $1,000. The market dips the next day. You almost pull it out. You don't. This is the moment you decide whether fear runs your decisions or you do. Your income is now $52,000. You have $18,000 in combined accounts. You're doing what you were told to do. Save, invest, avoid lifestyle inflation. And then you sit down one night and run the numbers all the way out. You model what 40 years of disciplined saving at your current trajectory actually produces. The number at the end is fine. It's enough. It is not what you want. This is the competence plateau. You are good at surviving. You are not yet good at building. The ceiling you didn't know existed becomes visible. And once you see it, you cannot unsee it. Level 4, the leverage. You start something on the side. You don't call it a business. It's just a thing you do on weekends that makes $300 a month, then $700, then $1,400. You don't tell your employer. You reinvest everything for 11 months. Your net worth crosses $5,000, then $8,000. You start feeling the gap between where you are and where a salary alone would take you. The gap is where the leverage lives. Your investments return $4,200 in a year without you doing anything. You understand now what an asset is, not theoretically. Physically, something that works while you sleep. Your relationship with time changes. Every hour spent on something that doesn't compound is an hour the machine isn't running. You cross $12,000. You're 29. You have a side income stream generating $2,100 a month. A brokerage account at $47,000. A 401k you're actually maxing. You still drive the same car. You don't tell people. You've noticed that talking about money at this level makes people strange, either envious or dismissive. Neither is useful. You start saying no. A destination wedding. A group trip where you'd subsidize 3 other people. A business idea from a friend who doesn't understand cash flow. No. The friction shows up in relationships. You feel it. You say no anyway. The shift is this: you stop spending money to maintain relationships and start protecting capital to build options. Level 5, the crossing. $34,000. Your money is starting to have a personality. It wants to go certain places. It resists others. You've had investments return $18,000 in 6 months. You've had one lose $7,200. You don't panic. Not because you don't care. Because you understand now that volatility is the cost of being in the game. You reposition. You don't retreat. At $5,000, you feel something you've never felt before. The assets start buying each other. A dividend reinvestment purchases 6 shares without you doing anything. Compound interest is no longer a concept. It's a physical force you can watch in real time. You are 32. You've restructured twice, exited one position, rolled proceeds into something bigger. You stop sleeping as well. Not from stress, from intensity. You turn down a job offer that would have paid $7,000 a year. Your parents don't understand. You don't explain it fully. Then it happens. A Tuesday. Your brokerage updates. The number is $104,000. You sit with it. You thought you'd feel different. You thought there'd be something. There's satisfaction. And then almost immediately it's not enough. Not in a frantic way. In a clear, practical way. $1 million at a 4% return is $4,000 a year. That's not freedom. That's a starting point. The milestone was never the destination. It was proof of concept. Level 6, the structure. At $2.7 million, money stops being a source of anxiety entirely. It becomes a resource. The way time is a resource. You don't think about your checking balance. You think about allocation. Where is capital positioned? What's the return profile? What are you not seeing? You hire wealth management. Then fire them when you realize you know more about your situation than they do. You find someone better. Someone who charges more, talks less, has clients you've heard of. Your business does $3.4 million in revenue. You own rental properties with $29,000 in combined equity. Your portfolio is $1.9 million. You are not rich in the way people say it at parties. You are wealthy in the way that means you have time. Actual time. You take a 3-week trip. You don't check email for 4 days. This is what people at lower levels can't buy. Not the trip, the 4 days. Wealth is not what you accumulate. It's what you no longer have to do. Level 7, the distance. At $8 million, the game changes texture. You're moving capital now, not working for it. You're in deals that will return $6,000 in 14 months. You're in others that might return nothing. You know the difference, and you're in both anyway, because correlation is the trade. You meet people at 30 million, 70 million, you study how they think. The pace is different. The patience is longer. They're not trying to win each hand. They're trying to stay in the game longer than everyone else. You stop talking about money with people who don't have it. The conversations become imprecise. People project. At $19 million, you walk into rooms you used to only read about. Not celebrity rooms. Rooms where decisions are made. You're at the table because your capital and pattern recognition are useful. That's a different experience of power. Your reputation becomes a financial instrument. It earns returns independent of your decisions. You make a choice you would have described as morally complicated 4 years ago. A restructuring. You review the cap table. You hold. Margin improves. Your position increases in value. You don't feel good. You don't feel bad. Not for long. You feel the distance. The gap between your decisions and their consequences widens. You don't resist it. Level 8. The isolation. At $47 million, the isolation is not loneliness. It's a different problem. The people in your life exist at a remove from your reality. Your closest relationships are with people who operate at the same altitude, not by design. By natural selection of conversation, fund structure, regulatory positioning, dynasty trusts. These things don't translate. You're not a different person. You're a person whose context has become untranslatable. You give more than you ever have, not for reputation. You give because at this level, money has stopped measuring anything meaningful about you. And giving is one of the remaining things that still feels like a decision. Above $50 million, money stops measuring your worth. It starts measuring your reach. You are 54. Your net worth is $68 million. The exact figure is known to 3 people. You think in cycles now. Demographic cycles. Infrastructure cycles. Credit cycles. You position ahead of them the way a sailor reads weather 3 days out. You're sometimes wrong. Being wrong means a position underperforms and you rebalance. It does not mean your life changes. You speak for 3 minutes in a room with enough combined capital to reshape a regional economy. The room moves around your questions. You leave before lunch. This is power at its most compressed. No spectacle, just a room that calibrates to your position. And somewhere in the city right now, there's a 24-year-old checking their banking app. The balance is $847. They're standing in line doing the math. They put the good coffee back. They get the store brand. They think this is a story about money. They think if they just make more, something will resolve. They don't know yet what has to resolve. They don't know what it costs. Not in dollars, in distance. The gap between who you are at the beginning and who you have to become to reach the end. The machine doesn't ask if you're ready. It opens every morning. It takes whoever shows up. And whoever shows up consistently, patiently, without stopping, they compound. The money compounds. And so does everything else. The balance is $847. It always starts there. It always will.